here. Now understand that what do you mean by the cash and cash equivalent. First of all, cash means obviously the cash in hand that we have here, as well as the demand deposit, example, the bank current account that is. So bank current account that here, we have money in bank account. Still that will be considered as a cash only that here. Okay. Now what do you mean by cash equivalent? Because they want to see the movement of cash and cash equivalent. What they want to see? They want to see the movement of the cash and cash equivalent. So when I say the cash equivalent, they say which is a short-term, highly liquid investment that are readily convertible. We can easily sell that here or encash them here to a known amount, which is very important that here. The known amount of cash and which are subject to insignificant risk of change in value. Now, what is going to happen when I say to a known amount? Someone say that here now that we have a share, we purchase the shares of, let's say, that knock company. I'm giving an example. Suppose we are an investor. We purchase the shares of a knock company. And what we want to do that here now, we want to see that here now the share that we have purchased. So can I call those shares as the cash equivalent? The answer is no, because we don't know the known amount. That is not a known amount. That can be when I sell the share, price is going to fluctuate in the market. That is not cash equivalent. It is also mentioned in IAS 7 that here an investment qualifies as a cash only when it has a maturity of 3 months or less from the date of acquisition that year. For example, the short-term deposit that were just for the 2 months in the bank. So we are going to call them short-term deposit or the commercial paper. We call them the cash equivalent. So what is this cash and cash equivalent? That is, first is cash means cash in hand, and demand deposit, example, the bank current account. And the cash equivalent is which is something which is readily convertible known amount of cash, and there is no, I mean, subject to insignificant, it look a negligible risk of changing the value for there, okay? And their maturity is within 3 months from the date of acquisition.